Welcome, everybody. We're doing kind of a special session today because I get a lot of emails saying, what the heck should we be doing in this market? And this is where candlestick analysis has made investing for me, after being one of the worst investors in the world, very comfortable. Now, obviously, we could see we were in a bearish J-hook pattern, and I started covering short positions here. We had good profits. But the panic selling, as you can see, has dropped it down further. So what we're going to kind of do, yes, this will be recorded. What we're going to try to do is kind of get everybody mentally set for what should be happening down here based upon what we're seeing recently. Now, remember, Friday we had that big bullish move going into the close. Now, that big bullish move, some people would say, well, that was short coming. But remember what instigates short coming. But there was some buying coming in, whether it was coming from other short covering situations or buyers. There was buyers coming in. Now, when they gapped it down today, when I did the YouTube analysis on Saturday night, it was on the basis that here are all the factors that we can put into our analysis that we can see much more. Why did you take the second opinion? Oh, the ugly? Nah. Now, I forgot what it was. Oh, we can start analyzing with much more clarity based upon the candlestick signals. We have all the factors that we need to tell us that investor sentiment is getting ready to change. Now, it could have changed today had we opened up positive. Now, remember what's happened in this market so far. We haven't seen 2 days of down or up. It's all been choppy. But we have seen buying in the oversold area after a gap down in the oversold area. That was our one alert. And then we also have moved a good distance away from the T-line, whether here or here. So the whole point of this session is to kind of get back to people that have been asking, what do we do in this market? It's killing us. When somebody says it's killing us or killing me, it's because they didn't look at the charts. Obviously, right here was the time that you started coming out of long positions and adding short positions. Right here, with the market moving that far away from the T-line, and you saw a Morningstar signal, you covered your short positions, but you didn't go long until you saw a confirmed buying above the T-line, which would have been a positive day that day, but the fact that they opened it back down here told us what was happening to the market. Up, down, and when this down hit, what was it telling us? They still weren't up above the T-line. Another up day, gap down, gap up, gap down. So when I put out the Saturday YouTube, it was on the basis that the candlestick analysis provides a very clear indication of what's going on in investor sentiment based upon what the next move will be. The fact that they gapped it down today told us obviously we shouldn't be buying just yet. Yeah, we can't do, the recording will be available later. So the Dow, this is why, you want to take a look at each of the indexes. Now, that might be a spinning top by the end of the day. That's the S&P 500. That's not good. That's still the transportation index. And that's not good, the NASDAQ. However, we still have another valuable piece of information. Look how far away we are from the T-line in the oversold area at the end of wave 3. So here's what you should be watching for. Start watching for buy signals. Now, more convincing buy signals than this. We might be getting one over here on the Dow. Now remember, this was not a reversal signal when they took it back up. This now becomes a potential reversal signal, the doji, in the oversold area, that far away from the T-line, especially if they start opening positive tomorrow. Now there was other indications. Oops, I'll have to go to the other chart. But there are other indications now that there's people buying. Look at Rite Aid off the 200. Pretty strong price move. Lake was acting well today, but here's some others that are acting well. APT, that whole sector, which is medical stuff, is starting to pick up some steam. Now, I'm showing this because I had written up a big write-up on, how come this isn't working? Well, for crying out loud, what am I doing here? J, A, P, H, I. Did I do the wrong symbol? That's just a fine howdy do. So here's what I call reverse engineering when it comes to analysis, which you get from candlestick signals. It starts showing strength. Remember, the markets are down 2,300 points now on the Dow. And this is showing positive trading. So a lot of people ask, well, how do we know which stocks to be buying or getting ready to buy? Because the reverse engineering is applied with candlestick analysis in the sense that it's showing us they're buying this sector. So that becomes a sector that we want to start paying attention to. Whoops, don't do that. Big left-right combo on BPMC, Blueprint. And VIR, bullish trading, also telling us there's buying in this one. So these are, this is a double, kind of a double whammy here, not a whammy, but a double influence. We can see which sectors are starting to be bought. And we can also be ready to take advantage of the information we already know about human nature. Where do most people sell? They panic, sell at the bottom. What are the indications that tell us we're getting ready to start buying, or should start buying based upon human nature? Just the fact that they gap down in the oversold area, and now you're starting to see some indecision again, and you add the aspect that you're that far away from the T-line. Does this mean the panic selling is over? Well, most people don't know. At least we have an inkling of what's happening at these levels. So, as you've seen in the newsletter or in the comments, we wouldn't be going short in this area, even though it went further short, because the probabilities with us being in the oversold area in approximately wave 1 and wave 3, now we're sitting in cash positions, and that sometimes sound sounds very lethargic or neutral, but when there's a point in the markets that you can't tell which way we're going, the whole point of candlestick analysis is the visuals provide us with much more clarity as to when or which direction things are moving. When you can't figure that out, that's a pretty good indication in cash. Now, I was mentioning in the chat room not too long ago that probably about 95% of the time I'm 100% invested. And that might mean I'm 80 or 8 positions long, 2 positions short, or 8 positions short and 2 positions long. Or if the market is moving sideways, I might be 5 long, 5 short. But when you start getting market conditions like this, down, up, down, up, down, it's starting to give you, it doesn't give you any direction. But it is giving us information telling us we're getting pretty close to the bottom. That gives us a lot more impetus, I guess is the right word, to start looking for which stocks might be starting to reverse. Now, the reason I'm trying to point this out to everybody is because even when I started learning candlesticks, I just couldn't imagine, with all the terrible news out there, that when I started seeing buy signals, oh man, I still wanted to make sure that was the right thing. And through the years, I've discovered that if I just listen to what the charts are telling me, because when you see something like this, most people are going to say, oh, that's pretty bearish. Amazon's down 76 points today. On the other hand, we're looking at it on the basis that it's down 76 after it was down 140 at one time. We've got a lot more information telling us there's some buying starting in here. So we've got a hanging man, now some buying. That should give us a lot more confidence. And I guess I'm using CJ's word there, confidence, because what are we all feeling down here? And this is kind of the rhetorical we. I'm thinking, man, things look bad. I wouldn't be going after anything yet. But now I'm starting to see buying that instead of saying, oh man, I'm not going to do anything because everything's terrible, because of candlestick analysis, turning my investment perspective around 180 degrees, I'm now looking for buy signals down here, or buy confirmation. And the reason I'm looking for buy signals is, before, being one of the worst investors in the world, if I had bought Netflix right here and I didn't sell it out, I'd be sitting in it thinking, man, when are they going to stop this? They got to turn around. It's going to go back up. Now I know to go look and say, when should I have been out? Up here. And instead of being anguishing on the way down, I'm now getting alert to when is the smart money starting to buy. Let's see. All right, so we're starting to see this. We're starting to see that there's buying down here, and that at some point, the investor sentiment is going to start changing, and we're going to be able to see it a lot quicker than everybody else. So this is what I call reverse engineering. I might not have any idea if we're sitting here thinking, all right, what should we be buying in this market condition? And the answer is, I might not have any idea. However, I can start seeing which stocks are being bought. which gives me, if I see something like this, I have no idea what XPEL does. Whoops, and how did I just get rid of all my, I need all my indexes. I have no idea what XPEL does. But today it's doing a big left-right combo, one of our strongest reversal signals. I have that on my watch list for two reasons. One, I'm going to be buying this if it confirms tomorrow, because what would be all our indicators? A big bullish engulfing signal in the oversold area, left-right combo, closing at the T-line. If it opens positive, what can we assume from that? It's confirming our left-right combo, and it's telling us the T-line is not acting as resistance. Somebody's buying this. Now, as I said, I don't know what XPEL does. But before I buy, I'll go look and find out what XPEL does do. And if it's something that makes sense, that they're buying this with these market conditions, that's just that much added confirmation that we want to start getting into it. Automotive products, okay. They had earnings, all right. Okay, so if I look at that, now I have to say, all right, is this something that's going to move up in this market condition? That's probably a less compelling argument or confirmation versus seeing something like Marna that we know is in the medical field. Replacement parts, okay? Okay, so I can go through right now because we are, and the reason we're kind of doing this session is everybody's saying, when is this bottom going to occur? And with candlestick analysis, I have much more clarity to tell us we're near the bottom because you see the buying start coming in that far away from the T-line. I want to start looking for which stocks are going to be adding or having the highest probabilities of moving up. And if they're starting to move up before the market reverses, that tells me the investor sentiment is already starting to change in some of these. Those are the ones that I'm probably going to go after if this market does start up. SP, that's a completely different, let's not get off topic, but Marna, I don't know, what's the bid-ask spread right now? It doesn't really matter. We're not trying to change the playing field, which is the bid-ask spread and that sort of thing. We're trying to analyze what is our upside potential on this one. A 3-cent spread, okay, that's nothing. Now, if it was a dollar spread, yeah, that would be tell me something. But a 3-cent spread doesn't mean anything. And these, yes, but that was our whole analysis. Look where it's trying to close, right here at the T-line. And this is one of our strongest reversal signals, a left-right combo that has an extremely high probability of reversing. And it's closing right at the T-line. So that becomes our confirmation. If it opens positive tomorrow, what are the two things that we know immediately? One, it's confirming our left-right combo, and two, it's telling us the T-line is not acting as a resistance anymore. I don't know whether I get, let's see, do I get, humbug. Let's see, is it BRKB? Nothing yet, but you can see what's happening again. They've been opening it and trading it positive. So you start watching to see. Now, a lot of these aren't doing signals yet. This is not a signal. So you start watching to see what type of signals are setting up. But because of earnings, do you still consider it? Yes. But now that becomes which one was that? XPEL, all right. That becomes a consideration to say, all right, let's say tomorrow the market opens positive, giving us a little bit more indication that maybe the bottom is set in. That's when I would consider buying it, because it's a strong earnings with a market starting to head up. Now, if we wake up tomorrow and the pre-market futures are showing us that the market's going to open up down another 1,700 points, then we might not be ready to jump in. Or if it starts trading positive, be a little bit more cautious about or watching to see what it does. I want things to confirm. I want the stars in alignment. So obviously, yeah, this is a kind of a left-right combo with a hammer off the 200, and look where it came, right back up into the trading range. So let's observe the obvious. Somebody is buying Rite Aid again. Yes, if I was going to set a stop, again, we're getting a little off, we're trying to concentrate, but if I was going to be buying this tomorrow, I wouldn't even want to see it close back below the T-line. Because what should we be expecting if it opens positive tomorrow? That it should be going in this direction. That's our high probability expectation of a left-right combo in breaching the T-line. If it opened here and closed here, what did that tell us about the T-line? First of all, it didn't confirm our left-right combo, and secondly, it didn't come up through the T-line. Oh. Nah, we're not even at the end of the day. Here's your volume. I mean, it's up there. Okay, so the whole reason, again, to kind of go through this in detail is we're starting to see signs of things that tell us we're way oversold. So the rationale should be, if we have kept money in cash for the last 4, 5, 6, 7 trading days, now we can start finding things because we already know we've got the elements of being well in the oversold area. Not so much well in the oversold area, but also the fact that we're in conditions that tell us if we see buying in specific things, we can start allocating that money we had in cash to start picking up bullish positions, because we're in a market condition that tells us the probabilities are now getting to the point that we're buying. I have bad audio. How about that? Is it because my voice is too low? I'll move the mic up a little bit. Kroger's acting strong, and I think there was other things like Campbell's Soup. How do I get Campbell's Soup? Campbell's Soup, same scenario. The food companies are probably going to be doing extremely well. Yeah, it took me an hour yesterday to figure out how to get my image over on the members area, and it was because my charts didn't go all the way down where I could see the click box to move it over there. And I hunted and Googled and all sorts of things. So we got Campbell's Soup. We've got This is another food company, CAG, ConAgra Brands. Big left-right combo. At least we're now getting indications that they're starting to buy in specific areas. One area that is showing a lot of across-the-board buying is the gold stocks. EQX, left-right combo. Kirkland. Big piercing signal. AU. There's your piercing belt lab bullish engulfing signal now. So this is why I always say observe the obvious. The signals tell you exactly where buying is occurring. Navigold, piercing signal. Even in the silver stocks, there's a bullish engulfing in Mag Silver. So what this is kind of trying to illustrate is the fact that there are sectors we can start buying based upon some strong signals. Now, are any of the other question is, are any of the big stocks moving? The only one I see that I would put semi in the big stock looks like Zoom is trying to set up a J-hook pattern. Let me finish one more here, and then we'll go to the biggies again. What's happened in crude oil prices? Crude oil prices right now are trading at about $29 a barrel. So something, but silver is dead. AL, yes, this is what is the difference between, not you, but anybody, thinking something. Here's Newmont Mining also. You can be looking at something and say, all right, silver getting beat up. So why the silver mines? We don't have any idea why they're buying the silver mines. We don't need to have any idea. What we do is we kind of circumvent our own thought process, which, if you're anything like me, my normal thought process was usually a 180 degrees wrong. When I thought it was time to buy, that was the time to sell. When I was selling, that was the time to buy. So, Hawaiian Electric, yeah, there was another one that looked like that. I can't remember what it was. But the reason, again, that I'm showing this is because a lot of people say, well, aren't you nervous about this market? And the only thing I am nervous about is we know that the probabilities of this extended oversold market is going to start snapping back pretty soon. What I'm nervous about, or used to be nervous about, was what if I bought something and it wasn't one of the ones that was participating in the next bull move? So there's very simple processes. Oh, now I got to blow my nose. That's why I hate the camera. I can start finding things that tell me these are the ones I want to start getting into. Or what is the logic of maybe looking at Netflix if it starts showing positive trading? That if we're going to be stuck in the house for 2 weeks, 4 weeks, 6 weeks, the Netflix revenue will start going up. CJ, and that's also true, that this market, because of the damage of investor sentiment, any tweet one way or the other can get it spinning, or the market spinning big time one way or the other. So as you can see, it could be a positive tweet, a negative tweet, positive tweet, negative tweet. What we're trying to do is figure out when investor sentiment is going to be solid enough. Another news conference today. Okay. Oh, HA. There it is. That's why I was getting it backwards. This is one of the medical stocks. You can see how it's setting up. And the advantage to this type of trade setup is if they break out through here, look at the magnitude of return that you can get. You could go from 16 to 35 very quickly. Roger, yes, and this is why people say, well, should we be buying if it's trading below the 50 or below the 200? And you remember what the most important aspect of what we're analyzing is the signal itself is the most important ingredient for candlestick analysis. It's telling you exactly what's going on in investor sentiment. Then everything else becomes a confirming indicator or a target. All right, so bottom line, this is why we're trying to get everybody set up or ready. We're wave 1, wave 2, wave 3. Well oversold, away from the T-line in the markets. And when the panic starts dissipating, what we want to be looking at is which stocks have the best chart setups that is telling us that that's where the investor sentiment is coming back in. INO right now, nothing. There's nothing there. Milam. That's a good chart. Because what's it telling us? Gap down doji. Remember our simple rule. If you see a doji gap down in the oversold area and they open positive, the doji rule tells us we're heading up. And then they opened it here and trading up here. I'm going to put that on my little list here because that is a very strong chart. That is telling you what's happening down here. They're starting to buy this stock. You can look at the VIX. I don't use the VIX, but you can also use that as an indicator. Look where they've gapped up in the overbought area. We haven't seen any signs of reversal, but that gives you the implication. Remember the two things that tell us we could possibly be heading for a reversal? The gap up in the overbought area, number one. Number two, a doji. All up here with stochastics overbought. That tells us if it starts trading off tomorrow, we're probably seeing some bullish action in the market. Oh, I'm going to see. Let's see. AOBC. That's apparently, yeah, I saw that one, but I couldn't figure out why that was, defense products. I'm going to move over here to give you a couple other indicators that kind of tell us. I think I can do this without too much problem. This was soybeans. Let me do this. Humbug. There we go. That's better. This is soybeans. This is a 10-minute chart. Now, on a day like today, when you can't really tell what they're trying to do with the market, doesn't eliminate having things to trade if you can't find something to trade But here's what you can see is happening in soybeans. I've been short soybeans on the way down. And right here on the close, because I knew it was in here, I closed out this trade right in here. Whoops, that is a 5-minute chart. I closed it out right here because I knew I'd be in here. So as you can see, they popped it back up. But there was other things that was starting to show that investor sentiment was starting to come back in control. Here's what happened so far today in feeder cattle. I'm sorry, in live cattle. And the nice thing about this, unfortunately, I didn't get into this because I was trading soybeans, but you can see they took it down the limit. They opened it positive the next day and took it down an expanded limit. Today they opened down the limit, but notice the difference. They started buying today. Even though they brought it back down here, that told you the buying was starting, that the panic selling was kind of mitigating a little bit. Now, what do we have? An inverted hammer. And what do we know about our statistics of an inverted hammer? If it opens positive tomorrow, then more than likely they're taking it positive. There's crude oil. And here's why you don't want to listen to anybody, the so-called experts. That's why I tell people, don't even listen to me, because I have no more idea about what's going to happen on price than anybody else. But remember when crude oil was trading at $115 a barrel? Did they get up to $130 a barrel? Where was the next target? $200 a barrel. And it wasn't ever going to go down again. Now we're trading at $29 a barrel. And what are they talking about now? $20 a barrel. So it took me, I learned candlesticks pretty quick, but it took me a lot longer to realize that whatever you hear, you disregard. Because who would have thought when crude oil was trading at $120 a barrel that it'd be trading at $29 a barrel and they'd be projecting 20? This is why I let the charts tell me what to do. Is soybean, is that a, whoops, goofed that up. Oh, I'm on the wrong one. Let's see, what else do we look at? Oh, gold. Gold is still down, which is surprising. You're right here at the 200. Now remember what that was telling us, or what we were looking at today. Gold was down, and look at the gold stocks. They're all reversing. Not so much took their profits in gold, but look where gold came from. It's got a huge run up, yes. But so a lot of people say, well, gold is down. Why are the gold stocks up? We don't know. And we don't have to know. All we have to know is somebody is buying and creating a buy signal in the gold stocks. Oh, on crude oil, well, let me take a gander here. No, that's not a buy signal. That was illustrating the fact that it's here at $29 a barrel after it had been up to $120 a barrel, and they were expecting it to go to $200 a barrel, and now they're expecting it to go to $20. RT, what was it? So the point is right now that crude oil is not a buy. However, whoops, what have I done wrong? Look what's happening to Whiting. Big reversal. Crude oil's down that low. Why do you think Whiting is trading positive with crude oil is way down at the bottom? Short covering is one, or two, let's say the panic selling on the value of this company started up here somewhere. And maybe, yes, there you go. Ray, it's cheap. It's probably oversold for what the value of that company is. So somebody's out there buying the stock because they think it's worth this much versus this much. So this is the important aspect of the visuals of candlesticks, is it's telling us exactly what investor sentiment is doing, not what investor sentiment is thinking or what the so-called experts are calculating or projecting. And that also goes back to the evaluation of, remember the times that you have seen a company that you were watching have fantastic earnings and they immediately start selling it off? Two things are happening. What are they? How come we can start a sentence, can't figure out what you're going to do? One, the price may have already moved up in anticipation of those earnings. Or two, those fantastic earnings weren't quite as good as everybody was hoping they would be. So this comes back to let the market tell you what the market is doing. It could have missed street expectations. And that's where my confidence in not only recognizing when a reversal is occurring, but because I've got that knowledge, which is very visual, as you can see on NOV, that's an inverted hammer, I'd start getting ready to buy this. Where do you think your first likely target should be? Back up to the tight T-line. Where's your second target? Fill in the gap. Where's your third target? Up to the moving averages. Yes, they may have come out and said their future earnings, but when you see a good, fantastic earnings and they're selling off the stock, that means something didn't work, or something's not working like it should. All right, so let's get back to, whoops, I got something on here that is goofing up my... Is this market over? We've got much more visual information than most technical trading systems by just seeing what investor sentiment is doing. If the Dow does a doji today, what's that telling us? It tells you it's indecision in the oversold area. See what the other indexes are doing. If the NASDAQ closes up as a hammer, again, that's one of your 12 major signals. Yes, you can buy whatever you want based upon the sector moving. What did I just do? Oh, GDX. Oops, got it off. Not quite a reversal signal. It's positive trading, but what type of signal is this? Anybody? There you go. MT's got it right. Almost a piercing, yes. There you go. It's not a signal. What was our criteria for a piercing signal? It had to open below this level and then close more than halfway up this candle. Now, that may not seem important. It almost looks like a piercing. Why wouldn't that work? Because logic tells us that if the Japanese race traders over the last 400 years saw this type of signal and didn't give us any explanation or any results of what would occur after that signal, it's probably not a signal, or it's probably nothing that's telling us there's anything significant there. So if you see something, now that looks more like a piercing signal, provided they close it more than halfway up this candle. That's Labu. Oops, I'm sorry, that's Nugget. So here's how you can easily identify which sectors you might be wanting to look at. Here's Labu. Again, what's kind of nothing great there yet. But if you start seeing dojis occurring down here, that means you're starting to get set up for a reversal. We're looking for the buying. There's Apple. So the only anxiety I have right now is that I closed out short positions probably a little bit too early. But when you see something like, forget which day it was, this day, in the oversold area, you start, if you got good, we had big profits, you start taking profits. Now, would have had bigger profits down here, but you always have to go with the probabilities. Yeah, I cut off the, hold on for a second, Jim. I am probably fully invested. This is that 5% of the time that because we don't have anything we can latch onto, where it's moving up, down, just wait for a few days. Something's going to happen that's going to make it much easier. So if everybody should not be getting queasy. We should be watching for a reversal, or at least buying, but then we also have the capabilities of seeing what type of buying. Like to see a strong move up, but it doesn't matter what we'd like to see. Maybe the next trend is like this, and they start all over from another trend like this, where they've washed out a lot of the exuberance, and now we're back to our normal analysis. Which sectors are working best for the next 2, 3, 4 weeks? Which sectors after that? All right, so the one question I keep getting is, well, how did you know to go short? Because as soon as we saw that, let me get this where we can see it a little bit better. As soon as we saw this activity, where they couldn't get back up above the T-line and then they did a doji gap down, who do you think was in control? The bears. Now, was there any way to figure out that it was going to have this type of move? No, but it at least puts you in the right position or right direction at the right time. Hogs, let's see, I looked at hogs. Yeah, we kind of look at these charts over in our options room. Hogs was down 240 today. But it also did an inverted hammer, which meant it opened lower and then traded positive. I can't, let's see if I can do this. So this gives us a bunch more information that there was buying today. We have an inverted hammer signal. If it opens positive, the probabilities are going to be pretty strong that the uptrend has started. On the other hand, if they open it lower and take it down below today's open, that tells you that signal was not a signal. It was negated. TMO, yes. So here's what should be your quick visual analysis. Bearish J-hook pattern, wave 1, wave 2, wave 3. Wave 3 about the same magnitude as wave 1. And you have an inverted hammer doji, you have a hammer signal. Even though they gapped it down, they're buying. So what's that telling you what's happening here? Still not a real fantastic chart, but at least it tells you this is where the buying is starting. ExxonMobil. Nothing yet, but again, a doji down here. You had hammer type signal on Friday. If they start opening this positive, you're probably going to expect a positive trade. Why is that? Because after gapping down in the oversold area and then trading down here, where are you? You're that far away from the T line. Have a good probability of coming back up. Is this a symbol? True. Heading in the right direction. Look at your left-right combo after an inverted hammer, a left-right combo. Where's your next likely target? Pain. Left-right combo. Another one that I'm going to write down. Packaged processed foods. Yep, everybody is stocking up their CJ, remember, the gaps are telling us something. There's lots of indecision. And remember what a doji tells us. Doji tells us, don't see one on here, physical palladium shares. Is that what we're looking for? Might start seeing some buying, still need to see confirmation. We did APT. It's starting to head back up, so keep an eye on this one. And Zynga. Oh, okay. Celestial Seasonings Tea on Hain. All right. Starting to see some buying. Nothing major there yet, but starting to see some buying. Boeing. Remember, all these charts are based upon investor sentiment. Boeing is still pretty bad. There's kind of your double doji setup, still trading lower. If you're short, you can stay short. But now, with you being that far away from the T-line in the oversold area, I'd have a safety stop at today's open. And Costco. Even though they've opened it lower, they're trading it up. So when you start seeing the color of these candles changing, that in itself is a quick indication to tell you this is where the buyers are starting to step in. Costco, same scenario. That's a good, strong chart. I think we did this one early. Unify. You can get ready to buy this one. Chesapeake. Another one, they've opened lower and they're still buying. There's your ticker signal. There's your bullish confirmation. That wouldn't be a, oh, that's Checkpoint. I'm sorry. Not Chesapeake. Whiting, you can probably start adding to this one. Okay, so I don't want to get too far into just because we'll do the stocks at the end of the day, which is only not going to be that far away. These are all starting to give us signs that the buying is starting to come in down at these levels. When they start opening lower and trading up, we're looking at the stock, it's still down 263. That's bearish to most people. We can see there's lots of buying going on right now. In Cisco, same scenario. So this is why I wanted to do this today, was that the panic selling is something we can take advantage of just based upon recognizing which charts are starting to show some strength. MMI, that's a nothing chart. If you happen to be short, you stay short, but you've only got 91,000 shares trading it. Yes, John. But we don't care why they're buying Costco. All we're interested in is that they are buying Costco. Somebody was saying the other day that the buying on Friday afternoon could have been short covering. Well, if you're in a long position and they're buying, you don't care whether they're short covering or whether they've all of a sudden fallen in love. It doesn't matter why they're buying. 10-minute chart shows you it could be bottoming out here. So if you were really aggressive and you thought, all right, Boeing is too far away from the T line, maybe they're going to start buying it before the close, yeah, you could trade off the 10-minute chart. That's what I was supposed to mention. We've got our normal members session tonight. Wednesday, we've got a special session on breakouts, but that's also probably going to incorporate what's going on in the market right now to show which stocks are going to be the strongest. And then Thursday night, we're going to be looking at the T-line, the triple T trading, using the T-line to kind of confirm what's happening in the candlestick signals, because I think on April 4th and April 5th, we will have a 2-day training on the signals in combination with the T-line. So first one will be Wednesday night. And what we'll be looking for is which stocks are probably in the reversal mode, or which ones have the potential of breaking out to the upside if this market reverses. Southwest, nothing yet, but you can see that it's starting to base down here. And APRN, for some reason they've jumped back in. Oh yeah, Blue Apron. Yeah, we looked at this earlier. Did they announce earnings or something? Something got them moving. Disney, hammer signal on Friday. You're starting to see it base in here. I wouldn't go long until you get more bullish confirmation. And that final confirmation would be closing above the T-line. VGR, there's your big belt hold signal. Opened way out of the range and came right back up. Wouldn't be buying it yet, but if it comes up through the T-line, this is going to be a very strong indication that the buyers were stepping in at these levels. Let's see. Here's one that's almost doing a... whoops, that's not what I wanted to do. FIBO, the T-line is this black line. This is the 8 exponential moving average. The red line is the 200-day simple moving average. The blue line is the 50-day simple moving average. We have those on our charts not because we use them to make our analysis. We use those to see what everybody else is doing, making their decisions at those levels. The T-line is the 8 exponential moving average. We call it the trigger line or the T-line, but it has a very simple calculation. If you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. But there's a caveat to that, which we saw not too long ago in Tesla, which is the further you move away from the T-line, the higher the probability it's going to come back and test it. So we've got very simple logic that if you start seeing that you're too far away from the T-line, and notice what was indicating that. You started gapping up. Where do most people buy? They buy exuberantly at the top. Gapped it up again. Look how far away you are from the T-line. What do you do there? You flip to your 10-minute chart, and when you see the 10-minute chart start selling, you close out the position because that's a good indication that they're now starting back for the T-line. So the 8 exponential moving average, you could take everything else off this chart, which, as you can see, is not all that extensive. And just use the T-line and the candlestick signals, and you dramatically improve your analysis of seeing trend reversals. John, it should be, when you go to the charts, there should be a place where you can add an indicator, and I think it looks like a little milk bottle or something. And then it'll drop down and it will show you how to add your 8 exponential moving average. All right, so there's going to be, I know what the investment sentiment is in people just in here, saying, when the heck are my positions going to turn around? Well, when I was sitting in that position years ago, I mean, I was always sitting waiting saying, oh, man, when's it going to start moving back up? Because I'm getting killed. And I can't sell because as soon as I sell, it's going to go back up. But 8 p.m. curfew, pancake, that means you can come into the chat room at 8 and you'll be protected and warm and cozy. Now I forgot what I was saying. Man, I got to write down what I'm saying because I forget what I'm saying all the time. What was I saying? Oh, I know what it was. It used to be I was holding my long positions, waiting for it to turn around, and just getting crunched. Now, well, it only took a couple times to say, all right, why am I sitting here? The signal told me right there to close out this position. You only have to do that once or twice, especially in a move like this, to say the next time I see this, I'm going to do what the charts are telling me. We're going to see a buy signal in here pretty soon. And people that aren't confident with candlesticks are going to wait to buy up here when they could have been buying down here. And then you're going to look back and say, why the heck wasn't I buying down here? There's only one right analyst of the market, and that's the market itself. And all we're doing is looking at the graphics of what people are doing, whether they're buying or selling, and the candlestick charts will give us a good indication when the bulls are starting to step in. Okay, I meant to keep this only an hour. I know we've got quite a few people that haven't been in here before. We will be doing another session for everybody on Wednesday night, another one on Thursday night, but there's going to be some big opportunities. As I mentioned before, my biggest anxiety is that I'm still not short, but you can't always do the right things at the right time. I took profits when I thought it was the appropriate time to take profits, but now I'm just waiting for the appropriate time to get back into the market because what I may have lost here, I might make up very quickly when it does turn around. Yes, the members chat will be tonight at 8 o'clock. Yes, we have a members session on Monday nights where we go over what the market's doing, what stocks are acting the best, what sectors are acting the best. We have a free session to everybody on Thursday nights at 8 o'clock in here. And then usually once, maybe twice during the week, we'll do a special session for members, which is entry and exit strategies, scanning for the best trade setups, where to put your stop losses. Everything that is, tonight is the normal password for members. You can. When you see, when they start talking, you see what the investor sentiment is going to do. Oops, I got to grab a drink here. So, you're welcome, Diana. What I'm trying to kind of convey is what I've gone through for years, knowing when I should have been out and when I should start adding back to the positions. You'll be back in, I'll come in before the market closes. Okay, everybody. If you're anxious about this market, let the charts tell you when the bulls start stepping in. And the advantage we have is we can see when to start stepping in with the prospects that if it moves big, we're in early. If it reverses again, we're back out with small losses. That's the whole concept of cutting your losses short and letting your profits run. No, we'll change the password back to the normal members. Okay. Thank you, everybody. I'll be back in less than an hour. All right.